Hey guys, how's it going? It's Andy from Go Investing. Happy Wednesday. In today's video, I'm going to be talking about something kind of exciting. In the past couple of videos, I've been talking about the fact that I've been holding a lot of my portfolio in cash because I have not seen a lot of great opportunities. Looking at the stock market for the past couple of weeks, I've tried to be really patient. This was a problem that I had very early on in my investing career, where I would finish a trade and then immediately throw it into the first best looking stock out there. So I never had any money just kind of sitting on the side. At this point, I've had money just sitting in my account for about a month now, and I finally found some what I think are pretty good opportunities. So in today's video, I'm going to be talking about the 3 stocks that I'm adding to my portfolio, but the focus of this video is how many different ways you can play the overall stock market. I'm going to be talking about options in this video, which I think are a fantastic way to boost the returns that people are seeing on the stock market, but a lot of people are too scared to start using options or too scared to even learn about how to use them correctly. So in today's video, I'm going to be breaking down how I go about looking at a stock, going to technical analysis, and then deciding which option I want to buy or sell. And I'm going to explain what everything means and kind of lay out what I'm looking for in these different trades. Before getting started, I have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just my own opinions on the stock market, and you need to do your own research before taking any positions. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Almost 90% of people are not subscribed to the channel, so go ahead and hit the button and join the channel. So one of the really important parts about this channel is something that I've realized kind of recently is the fact that I've done research on so many different companies. So I have a pretty good idea of what are some good deals in the stock market at pretty much any given time. But the important thing is figuring out how to transfer from information to finding good trades. Sure, there are plenty of great stocks out there, but you can buy shares all you want, but I really like trading options. And so in today's video, I want to talk about how I pick which stocks I want to go about using options trades for, because I think that is sometimes the hardest thing to do. One of the most difficult things about options trading is the fact that you are on the hook to buy or sell 100 shares of a given stock. So if you're looking at something like a Microsoft that's $200 times 100 shares, that is going to be 20 grand worth of money that you have to have set aside to be able to cover those 100 shares. So one of the criteria that I look for is you have to know what your price range is. As of right now, my upper price range that I'm looking for is around the $30 mark. And so I've gone through some of my past videos and looked at stocks that I've felt very bullish on overall. And the 3 stocks that I picked are Sonos, Twitter, and Snapchat. These are all companies that I feel very good about, and I think that's very important because the whole idea of trading options is that you are on the hook to buy or sell them for a given amount of time. And so if you don't feel super confident about the stock, you're not going to feel that great about your trade overall. And so these are 3 stocks that I would happily own at pretty much any price, which is very important because the way that we're going to be going about setting up these trades is by selling puts. And I'm going to be making a video specifically talking about options basics. But basically what you need to know is we are selling an option to someone else for a premium. So they're going to be paying us a certain amount of money to buy 100 shares of a stock from them at a given price. And so when we hop on the computer, I will show you how I go about picking out what I think is the best option for me. And in this video, I actually do sell a put on one of my favorite stocks, and I'll show you how my thought process for picking these stocks and how I decide how far away I want to pick this option and how much profit I want from it. So with that being said, let's hop onto the computer and let's talk about some stocks. I have not done a lot of technical analysis in the past couple months, so I'm always excited to get on the computer and talk about that. All right, so here we are on TD Ameritrade. We're going to be looking for some plays because for this video, I'm talking about 3 stocks that I am currently buying, but I want to make it the most profitable trade that I can possibly find. And one of the ways I'm going to do that is with options. So for most people, the process of buying and selling stocks is just you buy a certain amount of shares, and then once you're comfortable with it, or the trade doesn't go the way that you kind of expected, you sell those shares. And so there's plenty of other ways to play the stock market, and I'm going to explain how I use my option strategy to my benefit. And it's the reason why my portfolio has been doing so well this year is mainly because I've been trading options. So here we are looking at Twitter, and we get to do some technical analysis today, which is one of my favorite things to do. So what we're looking for is currently the stock is trading for $33, and we're looking for a lower price that I think could be a short-term bottom. And so I have some of the stuff charted out from a video I did a couple weeks ago, and what I'm looking for is around this $29 mark. And so we're looking for an option that, in addition to the premium, will protect me down to close to this level. And so the idea behind that is As of right now, the stock is at $33. But if for some reason the market falls or Twitter has poor earnings and the stock falls, I would be comfortable buying up until that point. So I'm trying to protect myself to the downside. And so the way we're going to do that is by looking at options. And I'm going to be showing the Robinhood options, and I'm also going to be showing the TD Ameritrade, because the TD Ameritrade ones are kind of confusing. So we're probably not going to be able to get down all the way to 29. So I'm going to try to get down to 30, because I think this is a pretty decent support as well. And I think realistically, I don't think it's going to get down to 29. So we're going to go to the options window. And so it can be kind of confusing. On the left, you have calls. On the right, we have puts. So we need to make sure that we know what puts mean. And so the idea behind it is we're going to be selling a put. So we are selling a contract to someone to say that we are willing to buy 100 shares of this stock by a certain date at a given price. And so when we look at this, over here you have days until expiration. So this will be 2 days until the contract expires. And so we're going to go, and the way that I normally look at it is I try to go far enough away where I'm getting enough of a return, probably around 4% is what I'm normally looking for. But depending on the volatility of the stock, it really depends. And so we're seeing some options for $33 with 9 days until expiration, where you're getting around 95 cents. And so that's not going to protect us down to the level we're looking for. So we're just going to keep going. So as you go to further away, this is 16 days. This is a 7-day difference, and you're getting almost $1 more. So we're pretty close here. We're getting close to what I'm looking for. And so one of the things that's kind of sticking out to me right here is this $32 put for $1.55. And so what that means is, as we go back to the chart, so we're going to be, so if the stock goes below $32, we're going to be obligated to buy 100 shares of it at the $32. But we're going to be pocketing $1.50 in premium, meaning that it's like we bought the stock down at $30.50. So this is what I would be looking for a play like this, where it's going to give me, it's going to allow me to pocket some money in the short term, and it's going to protect me to the downside. So if I was looking to trade this option, I would go in here and I would sell this $32 Twitter option that's going to expire in 16 days. And now we need to talk about some of the outcomes that can happen from this. So what this means is the $1.50. So it's $1.50 per share. And so since we're going to be selling a contract that's going to be worth 100 shares, that means we're going to be pocketing around $155, $160 of cash before anything happens. And so this is called the premium that's given because we're on the hook to buy 100 shares. If the market falls and it goes to $20, we're going to be obligated to buy it at 32. But we're picking stocks that we're comfortable holding for the long term, and we don't think it's going to do that. So we're going to be pocketing this money. And then we have 16 days where we're kind of on the hook, and we have to have $32 times 100 shares. So we're going to have $3,200 sitting in our account to be able to pay for this, or else you're going to be put into a margin call, which is a different video that we're going to talk about some other time. And so this is, I think, a fantastic trade. I currently have a better trade in my mind that I'm looking for, but this is a trade that I would be happy to take. You could even go down to the $31.50 and get protected down to almost $30. So there's a million different ways to do it. Let's go on to Robinhood and show what this looks like. Let's pull up Twitter. And so we are looking for the, let's see, trade options. We're going to go in here. Expires, what were we looking at? 24th. 24th, we want to sell a put at the $32 mark for $1.54. And so we'd be getting $154. And let's bring up our handy dandy calculator. So 154 divided by 32. So that'll be giving us almost 5% of profit if it doesn't get assigned, just for, 14 days or 16 days of risk. So this is how you make a lot of money reliably on the stock market. You are taking advantage of these high option prices, and you're buying stocks that you absolutely love and you would be happy to buy at this $32 mark, and they're going to be pocketing the difference. All right, so here we are on another stock. This is actually going to be the one that I'm going to execute a trade on right now. And so we're looking at Sonos, ticker symbol SONO. This is a stock that I brought up in my cheap stocks to buy video, and it's been something that I've been kind of eyeing for a long time at this point. As you can see, since the lows, the stock has been pushing up really fast ever since the middle of March, and it's been pretty impressive. And so as we come in here, I'm looking at the this level around $16. So I think it's on the upper end of where the stock is going to be moving in the short term. And then the long term, I'm expecting, we'll call that support. So maybe down to $13.50 as the lower end. And so one of the great things about Sonos, in my opinion, is that it's been extremely bullish. And so as we're selling a put, it's technically considered bearish because we expect it to drop to get down to our price. But we're also bullish because if it doesn't go down to that price, we still take advantage of the premium. So here we are on the Sonos option chain, and the thing that's sticking out to me right now is that there's not as many options for options. And so depending on how popular a stock is, it's going to have less or more option chains. And so as you can see here, we have the 9 days till expiration, 44, 100, and that's way different than the Twitter that has weeklies that are going all the time. But as we go down to the bottom and look at today's option statistics, this is probably the most bullish stock I've seen in a long time, based off the fact that the call volume is almost 3,400 calls compared to 350 puts. So that means that people are very bullish on it overall. And I want to be taking advantage of that bullish mindset. And so the way we're going to be doing that is I'm not going to be doing a lot of technical analysis for this one because this is just something where there's a lot of momentum on its side, and I'm trying to take advantage of this high implied volatility, the IV, which is sitting around 86%, which is very high. And so the higher that goes, the higher the option price is going to be. And so this is a stock that, based off the mid price of here, we'll be getting 70 cents. Let's bring up our handy dandy calculator. 70 divided by 15. So that's going to be 4.6% of profit. And that is, oh, my mouse disconnected. So for 9 days, we're going to be getting 4.6%, and we're going to be protected. The stock is going to have to fall at least 40 cents, which will be around 2%, for us to get assigned. So we're going to come in here, we're going to click on this option for a single, and we're going to sell it. The default on here is to sell 10. I don't have that type of money, but I will happily sell one put for, let's see if we can get the mid price. Based off of the low options volume, it's likely we're going to have to drop it down to the lower end, to the bid for 65 cents, but we're going to try it at the midpoint. So basically what this is saying is I'm going to be selling an option, selling a put at $15 that expires July 17th. If the stock falls below the $15 mark, I'm obligated to buy 100 shares of it from someone else, and in exchange for this option, they're going to be paying me $70. And so this is, in my mind, I think this is fantastic. It gives me some short-term exposure to the market, and it's not putting me in a long commitment of holding a stock that if the market falls like I think it might, I'm putting myself at significant risk. So I'm going to put this trade in. So we're selling one Sonos put, and we're going to hit send and see if we get filled. If not, which I think is likely that we're not going to get filled here, we'll drop it down to the 65 cents, which is the bid, which is more likely for us to actually get filled. So the ask has come down to 70. So we're going to go in here and we're going to cancel / replace, and we're going to drop that down to 65, and we'll try that again. Okay, so we got filled. So we sold one Sonos put, and so as we go to my trade, you can open it up right here, 9 days to expiration. Trade price is currently 67 cents is where we got filled, which is actually nice because I only wanted 65. And this is the mark that's going for. And so we can see how this option price changes over time, and that is how I take advantage of high market volatility, and I sell puts. And now let's go on to the next stock, which will be, let's pull it up, one of my favorites. This is Snapchat. So as you can see, Snapchat has been going straight up ever since its lows of below $8. And so this will be an example of a stock that I think I'd rather stay away from for this type of trade. So as we go into Snap, this has been a stock that has pushed up significantly over time. And when we look at it, for how quickly the stock has moved, it's up 5% today. The options are not that exciting in my opinion. So we just sold a Sonos put for a stock that was trading for $15, and we got 70 cents for it. When we look here for a pretty close to in the money, or pretty close to the current price, we'd be getting 90 cents for a $26 stock. And so when we put that in here, we'll put that as 0.92 divided by 26. So we're only getting 3.5%. So we're getting less of a percentage for a stock that in my mind is more volatile overall. So that is something I'm going to be staying away from. And so this is a stock that I would rather personally just own 100 shares of this straight up, because based off of the meteoric rise it's been on, I want to be a part of it, but I don't think I want to go into it with the options chain, because there's some interesting things. It goes from, when you add an extra week onto it, you can get close to $2, which is nice. I personally like having my puts as a shorter term, closer to 7 to 9 days, but you can go further out, and the farther out you go, you can get way more money. It kind of diminishes over time. If you go from 16 to 44, you're not getting that much of a return. You're going from, let's see, $1.90 to $2 or to $2.30. So that's an extra like 30 days worth of exposure, and it's not the most attractive thing in the world to me. So this is an example of this strategy. Works for a lot of things, but you have to be kind of careful on which ones you pick them on, because you're putting yourself at risk anytime you're buying or selling options. And for a stock that's very volatile, you want to be paid something that's fair for it. And so for a high volatility stock, you're expecting to get paid more than something else. When you go to a stock like AT&T, which is not very volatile, it's been sitting around $30. I'll pull up the chart. It's been sitting around $30 for a long time. It's just kind of been going flat for a while. When you go to $30 or go to the $30 option, you're getting 60 cents. So the lower volatility stocks are not going to be paying as well, because you don't have as much risk involved. And so there's a million different ways to play options. This is how I personally do it, and I'm very curious to see what you guys have to say about it in the comment section down below. So overall, those are my 3 stocks that I was looking to buy. I do already own Snapchat and Twitter, but you can always add to your position. And with options, the fact that you need to buy or sell 100 shares means that you're kind of limited on some of the stocks that you can buy. And so these were 3 stocks that I felt very good about overall. I ended up selling the $15 put on Sonos for around 70 cents. So that means I'll be making $70 of profit if the option does not get exercised. And then worst case scenario, I'm protected down to $14.30, which is probably lower than it's going to go in the next 9 days. So this is kind of my thought process for how I go about picking these options, and I think it can be a great part of anyone's investing portfolio as long as they know how to safely use options. And that's why I'm going to be making some videos in the future talking about kind of the overall process and what you need to know about options. So let me know what you guys thought about these 3 stocks, and let me know which stocks you are buying currently in the comment section down below. Thanks for watching this video, and I will see you on Friday.